Hey guys, we're still covering the different types of investments that exist. We've covered ownership investments and we have touched on lending investments, and today I want to discuss one other option where lending investments is concerned, and it's corporate bonds. This is MoneyWise with Rina Hicks, where we create, grow and preserve wealth. So corporate bonds, as I defined a bond earlier in a different vlog, is a loan extended to the organization that issues it, and it's issued by a company. Similar the way that we buy shares that are issued by companies, a corporate bond is issued by a company, except that you're not buying shares, you're buying a bond, or rather lending money to the company, and the company promises to pay you back that money after a certain period of time with interest. So the difference between the corporate bond and the treasury bond is really one main thing, and that's risk. Because you're depending on the cash flows that will come from the company's earnings to be able to pay you back as and when your money falls due. So similar to the bonds that we covered, you lend the money, say for example you lend them 100,000 shillings, 200,000 shillings, whatever amount you have available, and then they promise to pay you back a certain interest rate. Let's just say it's 15%. So every 6 months this company needs to pay you back your interest, and then at the end of the period they'll pay you back the interest with principal. Now the thing is that if this company doesn't do well and business is tough, then they're going to struggle paying you back. And so the way that you analyze whether or not you should invest in a corporate bond is on the performance of this company. So similar to the way we were looking at evaluating whether or not a share is a good buy or not, those are the same things that come into play. Let's just run through them for a second. One of those things is, what does this company do? What business is it in? Is it lucrative? Does it make sense? Are they cash flow positive? And what that means is that are they generating cash from their business? If they're not, then that's a problem. Are they able to pay for their continuing obligations as business progresses? If they're not, then that's a problem. Who forms the board of this company? Who's the management? Are they accountable? Are they making disclosures as and when they need to? Is it a company that is known? Is it a name that we know? And in addition to that, what is the future outlook of this company? What strategy do they have? Those are questions you need to ask yourself, because unfortunately, as we have seen even in this market that we are in, that you can invest in a bond and the company can fail to pay you. And so the other thing that you need to make sure is that the interest rate that they promise to pay you makes sense. So say for example, a company says that we're going to issue a bond for 5 years and we're going to pay you an interest of 15%. What you quickly need to do is find out the treasury bond or the bond that is offered by the government. What interest are they offering? Is it 15%? Is it 14%? Whatever that is. And then put a markup for risk on top in order to decide whether or not the bond from the company is one that is worthwhile investing in, because it needs to compensate you for the risk that is inherent in investing in this company. So usually most people will put about 3 percentage points, 2 to 3 percentage points above a similar paper that is issued by the government. Then that's where you know you're covered for risk. So that's my advice to you. Just make sure you analyze the company that is issuing the bond similar to the way that you would analyze it if you're investing in shares. So I wish you all the best. In case you have any questions or need any clarifications, please write to us, sema@moneywise.co.ke. You can also find us on Facebook and on Twitter. And subscribe, hit the subscribe button below. I wish you all the best. We are here to answer your questions and to help you on this investment journey. This is MoneyWise with Rina Hicks, where we create, grow and preserve wealth.